in. Let's go.
Let's bring them all in and see what's going on.
Morning, gents.
Good morning, sir.
Happy
How are
St.
you
Patrick's
today?
Day there, Steve Flanagan.
Here we go. Lucky the Irish to everybody.
Right, and make sure you say it's St. Patrick's Day. It isn't St. Patty's Day. I don't need Steve's wife chasing me around the country.
My wife would be very disappointed. She does not, as she is actually Irish from Ireland. So yeah, it's interesting. It's what's interesting is Steve is this talk we've been hearing about over the last 3 weeks. Trump talking about tariffs. Are we getting tariff fatigue at this point?
Steve, you took the words out of my mouth. Yes, absolutely. I mean, what we're seeing is tariffs and then negotiating and then boom, there's a deal. Okay, April, reciprocal tariffs. Now that's going to be an interesting, but it's a one-time shock. And let's be real. If you sit down at a table and say, you've got a 25% tariff on my good, but I have none on yours, and you're running a trade surplus. I mean, come on. Let's go.
I feel like it's like Oprah Winfrey going, you get a tariff, and you get a tariff, and you get a tariff. But people aren't really saying that anymore, right?
No.
Real quickly before you just go ahead, U.S. business inventories month over month, actual now coming in at 0.3% versus minus 0.2%. Previous reading, their estimate was 0.3%. Coming in line. It means that businesses are actually starting to put more inventory back on the shelves, right?
I think, any businessman is looking out. Right now, we are suffering from simple economic and policy uncertainty.
Yeah.
And I think everybody's saying at the end of the day, if the job gets done, if the deal gets made, then you've got to be looking at June, July for everything to begin to perk up. Now, when it comes to inventory, clearly you've got to get it on the shelves,
right,
so that if this upturn does take place, you're ready to go. So to me, that all makes sense. And I think we're just in this waiting, patient mode. Right. Some of the things I would point to is look at every single chart coming in an incredibly oversold territory. So we're just looking for, as we talked Friday, that little sprinkling of a little wee bit of luck or a little sprinkle of some good news.
Yeah, I've said that for like the last 2 weeks. Any good news happening, the market's going to put it back up. We're hearing news that Trump and Ukraine and now possibly a ceasefire for 30 days. You're hearing now that China may be playing ball with us. India, the United States, with possibly a trade partnership here that may be different. Redoing the CMCSA between Canada and Mexico. Is there something that really is standing out at you, Steve, that you really I got to see this to make sure so that I understand the world's going to move forward and go better? Or is it just a combination of everything?
It's the combo effort there.
Okay.
Every single one of these flashpoints for the past 2 to 3 years, I think every other word I've come out with is geopolitics. And suddenly, if geopolitics begins to be out of this equation, United States, when it comes down to the bottom line, your economies throughout the world are weak. And in order for political leaders to stay in power, they need to have the populace in a good mood, which means business has to begin to boom. Growth is the answer to the problems of the world. All the political leaders realize it. Trump has finally come in and he's pushing in all the right directions. And I think the people around the world are starting to say, hey, if you're going to lead it, all right, yeah, let's get on board, because what's the downside?
And I'm going to share my screen here real quickly. I hope I can do that. Howard, I'm going to pull this presentation. Yep. The OECD today came out, Steve, and said that consumer confidence has declined, not just in the United States, but literally everywhere. There's no real place except maybe India that's holding up in the emerging markets. Everybody's saying that consumer confidence is falling, and that headline inflation everywhere is picking up. And as you just said, GDP growth projections are pretty much negative. And by 2026, everywhere. It's not just that it's bad today, but that they're talking about it could be bad tomorrow and bad in another 2 years from now, right?
Yeah, this is another one of these very large organizations that, I mean, we've all just lived through the last 6 months. Anybody say shocker that world growth or growth is coming lower? I guess what it is it's an acknowledgement to what we've all been saying for months and months. So from the political elite, let's call it, our leaders throughout the world, no matter what your country is, they all are getting to the wake-up call. We've got to get something done. Trade is what everybody has focused upon to keep the engines of the world going. And what is Trump coming in? He's shaking it up, saying, look, let's just do this, but let's do it fairly. Nothing wrong.
And you talk about that with India, the new deal with India with us. But in that OECD projection, they're saying 6.3% growth this year with India, 6.4% next year, and 6.6% in 2026. That tells me the opposite, right? He wants to deal with India and not put tariffs on India, yet the growth is probably the biggest in India than any other place, including China, which they're calling for 4.8 and 4.4. So even less.
Right. And
so what is China doing differently that's not pissing off the president?
Well, Steve, you can see the alliance with Russia, kinda,
right,
and the alliance with China, with India, all meant to do what? To kind of box in and put more pressure on China.
China. So you see where I'm going with this, right, Steve?
Yep.
All right, so let's talk about these currencies, right? I mean, we talk about that, and I'm gonna let you finish that thought. But the rupee, the yuan, these are going to go against, and I don't like saying it this way, but the BRICS, right? In a lot of ways, is it going to be us against them in the future when it comes to currency trade war here?
I don't think BRICS has got a longevity to perhaps take on the dollar. The dollar is entrenched as a reserve currency. For the BRICS to get it together, they're going to have somebody with a strong economy. Okay, give me one out there, nobody. So nobody answers that real theme. So I think if we see this world as
you don't trust China's call of 5% GDP every year for the last 152 years.
Well, let's just look at the announcement over the weekend again. Well, we're gonna do this. We're gonna give you a little bit more money here, and we're gonna do this over there. Okay, show me where it's at. Show me the realness of it all. So, no, Steve, I don't really see BRICS as it's a threat, no question about it. It's an alliance that could work against the dollar, but I'm gonna put that, Steve, out. That's a 5 to 8 year plan out there. I'm going to focus in my investing in the currency markets. I'm looking here in this next, year. And I think that the king dollar is just waiting for the news to start coming out. And we're going to start to see the wheels of peace around the world turning. And I think that the dollar is going to come right back once we get through the April reciprocal tariff stuff. How many nations suddenly come to the table by mid-April and say, all right, yep, we're going to reduce that.
Right. And I'm just reading here that Treasury Secretary Ascent now says that White House is heading off a guaranteed financial crisis. Is he saying that the previous crisis is from the Biden administration? Is this political?
Ooh, that's kind of saying it like it is. I do like this guy quite a bit because he sits there and answers every question that's thrown at him.
He's a Fox Business contributor. I mean, Fox News, right? So he just tells everything he knows, right?
Yeah, and a guaranteed financial crisis. I mean, that kind of goes to, you see the psychology that these guys use, man. These guys are in the know. By saying that, it's basically under every comment of the last month, that's really what people are saying. They're all worried about recession, depression, it all coming on. And here he is basically saying, we're going to head that off. And I there's a little sprinkle of that positive.
Yeah, I mean, he's also the guy over the weekend who said this is just a healthy correction. So, it matters what day it is and how he's told to report. Intel up another couple percentage points here as announcement just came out. I saw that their CEO purchased $25 million in stock after taking over. So, as the headline said, he's putting his money where his mouth is. So good to see that on Intel here.
But Howard, to that point, is this anything more than a correction right now? I mean, 10%, 15%?
No, I think it is. I think it's right.
If you look at all the charts, they're all baselining here.
They are as of right now. It's just a matter of where the next move goes there, Mr. Flanagan. That's going to decide whether this is a much bigger problem that they are being ignored or whether they have done the right thing. We'll find out in the next few market weeks. That's the great thing is I don't have to tell you which way it's going to go. The market's going to tell us which way it goes.
The price tells you everything. The data don't lie. But right now, everybody's a bear and everybody's on the left side of the boat fishing. So it's time to throw the hook in with a nice chunk of bait on the other side of the. That's the way I would look at it, and that's the way the currency markets are beginning to tell me.
I'm gonna throw a curveball at you, Steve. Here is a country that I have been looking at very specifically, and I think that it's something that we're missing, and it's Turkey. Right, Turkey's inflation rate has been outrageous over the last, I'd say, 10 years now. But with the OECD now saying 58.5% inflation this year alone, 31 next year, and 17.3%. Turkey has their own currency, correct?
Yes, that's right. Turkish lira. Yep.
Yeah, right, and the TRY. Right. So
that's right.
When I look at the TRY from a perspective of the next. And I want to pull up the futures here. If you can pull up the TRY in currency there, Hondo. I'm going to put it.
I had stopped sharing, so you could hold it one.
Okay,
second.
Yeah, if you don't mind, put it up. Pull up the Turkish lira versus the Japanese yen.
Ooh, there's a nice one.
Yeah, it's TRY JPY. So there you go. Right, should be right there on the top. We are seeing. You would expect possibly the yen to be pretty strong against the Turkish lira, right?
That's exactly what that chart would be showing you. You're selling Turkey, buying yen. Now,
and if you look at it from the perspective, let's pull up a weekly chart.
Now, the problem there, Steve, is that the Turkish lira has to devalue each and every day to keep pace with that inflation rate.
Right. They have their own problems. They have the worst.
But if Turkey, and this is my thesis, if Turkey's inflation rates, according to the OECD, is going to start coming down, wouldn't this be a nice pickup, a buy down here?
This would be a super carry trade in the sense that I don't have the number in front of me, but I'm going to put a ballpark that Turkish interest rates are probably north of 35-40%.
Yep.
And you would, if Turkey's inflation rate were to come down, then you would have an incredible trade to be long Turkish to earn the points. But that's one of those that you're going to have to fly by the seat of your pants on it because
just to give you some numbers there, so you guys have the data. It has a 50% inflation right now with a 42.5% interest rate.
But my question is, I think, and if you're looking at OECD numbers here, and maybe I'll share my screen so I can make people understand what I'm talking about here. And I think I've highlighted it there at the bottom if you can see it. I don't know. Oh, I got to pull the screen off there so you can see it. There we go. At the bottom there, they're expecting 58.5 for last year, obviously in 2025. 31.4, so they expect it to lower a bit here, and 17.3 for 2026. And as we just talked about with Japan, their numbers are staying pretty much the same, right? They're maybe a little bit of a bump this year in inflation projections, but not much. This looks like an interesting play for me.
Steve, I think you're probably bang on to a potential. Two things. One, maybe I might look for a different currency other than the yen, because yen is going to move into a higher interest rate scenario. So maybe I'd look for another currency. Maybe the euro might be a better one
I can see that
because it's in that realm, in that sphere. The second point I would make is the problem with Turkey outside of your inflation and your economics is just the cronyism that's gone on there. I mean, I come from the day when they had a brother-in-law or a relative put in charge of the treasury after he decided to get rid of the other treasury guy who wasn't, playing along with the government. So, I get a little worried about that country until I see some real fundamental reforms going on, perhaps politically. I do get worried that one news headline will wipe you out of that trade.
All right, well, let's look at that, Howard. Can you pull up the TRY-EUR on the chart? And I like this play. Maybe a better play. I like this. See, we're right here. We're making a position here. I like this. I might take this trade here, longer term. Yeah, look at that. And you can see there's a couple of pops there. So this is not one of those that I'm going to play till I die, right? This is one that I'm going to.
This is a trade. This is called Euro Turkey, I believe, is the way it's expressed. Yeah. EUR is the first currency.
No, this is TRY in front.
It's TRY EUR. We can flip it around if you need, but I think this was the way I was trying to get it.
Yeah, the convention in the marketplace would be. Yeah, there you go. So you can see how high the euro has come.
So you'd be shorting this the other way around, right? So
you'd be going short euro, long Turkey. So you'd be basically selling up at the tippy top here.
Yeah.
Now you've got European rates at going down. Now they may be coming close to an end, but you're still, looking at 2.5% basing in the, and you're looking at a position here where if inflation comes off in Turkey, interest rates won't come off rapidly because the Turkish lira is so oversold in the marketplace.
Yep.
You might see a tremendous move down initiating. So, Steve, not a bad play here, but you got to be on top of this one, in which we say you've got to leave a stop loss in that Turkey, because if news comes out where another brother-in-law or sister-in-law suddenly is put in a key economic position, the cronyism is back.
Right, and I agree with that. But I think the country is starting to. They want to join back into the world again, and I think once that happens, this could go right back up. All right.
And the scenario we talked about, peace throughout the world, Turkey's going to be a primary recipient of that. Nice play, Steve. I like that idea.
Here reports now that top global CEOs will reportedly attend the China Development Forum in Beijing on March 28th, which is coming. Do you think the talk, we just talked about this just a few minutes ago, you think the talks will be about tariffs and Donald Trump and China?
Yeah, they will be. But I think also I would look, China plays the long game. They're not in the short game. And if China plays the long game, they're going to be talking about, solutions, because they see the benefit. They're in the primary position. If the world begins to grow, nobody's got a better seat than China.
You don't think India?
I do. You're right. India would be my again, in my world order, I'm dollar long, I'm king dollar.
Yeah.
I like the yen a lot. I jump into India, followed by China. Maybe the euro jumped in front of China on that German news about taking off the brake. However, in the bureaucracy within Europe, that's probably a 6 to a year out before we begin to see decisive moves in that direction. Maybe sooner. That would be making me want to be perhaps more a bull in the European space. And then the UK is, suddenly slipping into last because they're just sitting watching what's going on.
Absolutely. Mr. Flanagan, you have any charts you want to share with us today?
Well, I was just going to bring up the chart that I had on Friday, which was the dollar index.
I can do that for you.
Yeah, let's see. Here we go. Share. Okay, so when I look at the dollar index, I look at this 102.80 as the key level, and we're not that far off. We're sitting around the 103.15 zone. Around the 50 zone. So, 70-point downside. And I do see us up at 104.10 making a break. As any positive news, you can see how strongly we are oversold. I mean, you're getting into historical type levels in oversoldness here. So the slightest positive, 104.10 is my break zone. But what I like to look for, and Howard, on Friday, you had a gentleman in right after me who also talked about the charting and looking back. If you begin to look back at this 102.80 level, you could see the significance of these trading zones. I mean, we're way back into 24 here. And this is what I love to do. I love to find a bottom. I draw my horizontal line, and then I see where it matches up on my chart. And it's amazing how the long-term perspective, this is why we bottom and top so often at these levels. So I look at this chart. This is the one I really wanted to highlight today to you, because this is the one that I think that we want to keep a close eye on and watch very carefully. Presently around the 103.55 zone. 104 just above is where I'm looking at. That's the break point. But we're in this period of economic and policy uncertainty. Currency markets are sideways. The only problem I see is the more you go sideways, the more the oversold nature of the dollar index begins to unwind.
Yeah.
Right.
And that could create an additional play down in the dollar.
Pressure, a little more
right.
pressure.
So that's why I highlight 102.80. We break that level on a daily close, and you're going to see this dollar slide further very quickly.
Right. That would start the vacuum we've talked about, right? All those moves would be triggered immediately.
That's
and
right.
What about the loonie? I mean, with all this tariff talk in Canada, I mean, if you think the dollar is going to slip a bit here, does this make the loonie a little more powerful?
It would definitely. I think that Mark Carney is the real deal. He's a central banker. He's now forced into being a politician. I would be looking very closely at his upcoming meeting with Trump and for some decisive type talks, because he's pragmatic. So he's not going to go in there and talk like a politician like Trudeau. He's going to go in there and he's going to come out. We agreed to this, this, and this, and we're going to move on. And I would look at that as a positive. And in that case, Steve, you might get some good action in being long a CAD.
I like that. Two plays out of this meeting. All right.
You want to get into their loonie and you want to get into the CAD. That could be the double bang you always look for in the currency.
You're saying that Mark Carney is as a non-politician won't back down to Donald Trump.
I think that, of course, he'll look for a solution. That's what I'm trying to say.
Okay, I like that.
He's a non-politician. He's going to go into a meeting. He's going to hold firm, but he's going to come out of the meeting with a solution. And I think him and Trump, in that case, have two strengths in that area. Let's figure this out. When the meeting comes out, we've got a solution in place. And given all the oversold nature of being short CAD because of the tariff talk, you might get a nice pop on that.
Nice.
All right. Well, it's we've held you long enough today, Steve. I tell you. Yep. But we got some real nuggets out of this one.
Yeah, we did. And there's a lot of areas that the currency market can really, give you extra exposure to certain plays. We've talked about, Steve, your turkey idea. I'm a little hesitant on that. I've been traded to turkey and I've been burnt on that one. But the CAD, though, that's another idea here. And again, you want to keep in mind, remember the great part about currency trading, 24/7, 5 days a week. Right. So all you do is pick up and bang, and you can sell or buy anytime, day or night. And that's the lovely thing about currencies.
Mr. Flanagan, we've got BOJ, BOE, and the Fed all up. You expecting any policy shifts this week?
Well, the one I want to look out for, one, I don't think that the Bank of Japan is going to raise rates. I think that could be a bit of a disappointment, so I would look for a bit of yen weakening. However, the one that I'm watching very carefully is Bank of England, because they are about 0.5% behind the curve.
Right.
And watch Bank of England here, whether they give us a 0.25% decrease in their rates, presently sitting at 4.5%. Whether they give us a 0.25% with dovish talk, that might be interesting. Inflation has been stubborn within the UK, but that's because the system, prices do not get disseminated. They get jammed up. So the activity of the lower pricing is just caught kind of in the cogs of the wheel right now. But I do think that the situation there warrants a 0.5% interest rate cut. I take the other side of the coin. I think global inflation is coming lower. I think that you just look at the price of oil, and there's one of the major components of this whole inflation throughout the world. Even if we're going to come home, egg prices are coming down. So I think inflation is on the lower side, and I think the central banks of the world need to get with it. We need growth. We don't need restrictive monetary policies.
I love it. Well, we'll let you go on those notes, everybody. We will see you back here. We got Dr. Alan Ellman in at 11 o'clock. At 12 o'clock, we have Agnieszka Wood, and we got Scott Bauer in at 1 o'clock. So busy day across the board here. Everybody have a fantastic day. Have a happy, healthy, and safe St. Patrick's Day, everybody. Steve and Steve, have a great one, guys.